Hi guys, and welcome to chapter 2 of our price structure discussion. What I'm going to do today is, as promised in the first video, I'm going to take you through how we can start using our understanding of price structure and drawing in price structure lines to interpret what's happening in a particular market from a trending perspective. From a support and resistance perspective. For those of you who haven't seen part 1 of the price structure basics series, if you go to the Underdog website, which I have up on the screen now, just click on the trading journal, and if you scroll down, you'll find a video posted somewhere in this list. Right, so let's kick off, and what I have up on the screen now is a daily chart of Richemont, running from round about Feb 2014 through to May 2014. Now, just as a quick recap, you'll recall that the two basic rules that we have for drawing price structure is that in a downtrend we need a lower low and a lower close, and in an uptrend we need a higher high, higher close. So let's start off with drawing in our price structure lines, and just starting off at this initial high point here, we can see that the market moves down, putting in lower lows and lower closes. Then we have a bit of a rally over here, and then it continues to push down again, shimmies up, it pushes down, and again all we're doing here as we go along is applying those two basic rules that we set out in the first video around identifying higher highs and higher closes, and lower lows and lower closes. Here the market pushes down, but then starts to rally without breaking the previous low, and we'll speak a bit more about what that means and how we can start using that kind of our understanding of price structure to interpret what's happening in the market here. Market pushes up, pulls back, and here we see it start to rally, putting in higher highs and higher lows. Right, so as I said, the drawing of these lines we covered in part 1 of our basics video series. What I want to now focus on, what does this all mean? So once we've got our price structure and we've drawn our price structure, and you'll recall that one of the key things here is we are not being subjective in terms of how we're drawing this price structure. These structure lines are drawn on the basis of a very specific rule set, which is completely repeatable, and that's essential. Anybody who comes into the room and applies those particular rule sets will come to the same conclusions in terms of where these structure lines are drawn. So once we have these lines in, what can we start seeing? Well, let's start here. We've got an initial high here. This is our starting point. Let's call that initial high. Market pulls down, makes an initial low. Then it pushes back up, you can see there, and what we have here is lower high. Market pushes down, breaks previous structure, makes a lower low. Then it pushes back up, makes a lower high, and so on and so forth. We continue to make lower lows and lower highs. This is your classic definition of a downtrend. So this is your market in a downtrend, and when in a downtrend, what you would be looking to do is to find an opportunity to short in this market. we put in a lower high there, and then the market pushes up, makes that lower high, pushes down, but here's where it becomes interesting. It fails to break it close below this previous lower low. Instead, it makes a higher low, continues to make a lower high, pushes back down again, fails to break and close below this one, makes a higher low. Then the market pushes up, actually breaks this previous high level, and what we see is it makes a higher high. Now what's happening here is we've effectively got this downtrend, and what we're seeing here as it fails to continue to make lower lows is we've got a period of consolidation, and then when it breaks the previous lower high, what we're starting to see is an uptrend starting to fall. So the market makes higher, now making higher highs and higher lows, another higher high, just makes a higher low there, and then what happens here? We have the market making a lower high, and then it breaks structure to the downside and starts putting in lower lows again. So what we're seeing here is quite a classic downtrend, consolidation, uptrend, and then the market breaks down again. And as you can see, I've done nothing else other than drawing price structure on a price chart and identify higher highs and higher lows to give me my understanding of what's happening in terms of this particular stock in this time frame. Couple of interesting things we can start looking at here is, as I said, when we have these series of lower highs and lower lows, we're going to be looking for opportunities to get short. The market pushes down here, pulls back, pushes down, pulls back. Where does it pull back to? It pulls back to the previous low level, into this zone over here. That could be an opportunity to get short. Market pushes down, pushes back up. Where does it push back up into? This previous structure resistance over here. Market pushes back down, pushes back up. Where does it pull back to? This previous structure resistance over here. Also, what we can start seeing over here is we start drawing in some support and resistance levels. Just get that right. Oops. Not getting that right at all. What we can see here is when the market fails to make lower lows following this downtrend, you can actually see this period of consolidation, and we can see the strong support level that's developing over here. Another way to look at it, you can look at these that lower low and that higher low as a form of double bottom. You can call it a triple bottom, whatever the case may be. The point is, in interpreting it, you can start to see that this market has ended its downtrend, and you would then be looking to, if you were in a short position, this would be the area you would be looking to start taking profits on any shorts. When it breaks up and makes this higher high here and then pulls back into support, that would be a great opportunity to start looking at getting into a long position. You could then ride that up, and again what you see here is when the market fails to make a higher high following this uptrend over here, that again would be an opportunity to start thinking about taking some profits of any long positions that you were in. And again, you could look at this area over here and say what's effectively happened here is on this uptrend you've made a double top, which is indicative that the market could be looking to roll over. So again, I want to keep these videos pretty short and give sort of bite-sized insights into some of these price structure interpretations. But that's our video for today. I hope it's useful. And importantly, the important thing to take away from this is that we are keeping things really simple here. All we're doing is we are identifying our price structure lines, and now we're starting to interpret those lines. As we go further into the series, we're going to start looking at how do we structure some trading opportunities around these things. How do we make it even simpler to try and identify when to potentially get involved in the market, given our understanding of these price structures. Guys, I hope it was useful, and I'll see you in the next video.